How to pay off your mortgage in under 10 years in New Zealand in 2025. If you've got a mortgage, you've probably wondered, is it even possible to pay off this thing even faster? Maybe you've heard of people say, just get a revolving credit, or fix your rate for 1 year or 6 months, or throw a little extra at it each week. But here's the truth. Most of those tips don't work long term. So by the end of this video, I'm going to show you that how long you'll pay your mortgage has far less to do with your mortgage structure and everything to do with how you manage your income. Because when you understand how to control your income, you control your mortgage and your freedom timeline. So stay with me because I'm going to walk you through step by step through how to pay your mortgage off in under 10 years. And at the end, I'll share the 3 biggest mistakes Kiwi homeowners make that keep them stuck for 30 years. The average Kiwi mortgage is huge, and it's keeping families trapped for decades. People think that if they can just get the right structure, they'll finally get ahead. But the real reason most people stay in debt so long is because their cash flow isn't being managed with intention. The good news, once you control your income, you control your mortgage. And when you control your mortgage, you get your life back. Think of paying your mortgage like baking a cake. You've got the right ingredients, but throw them together in the wrong order and you just get a mess, sloppy, goopy, not even a cake really, right? But follow the right recipe and you get predictable, delicious results every time. That's exactly what we teach inside our Freedom Blueprint. Step 1, get control of your income. Maximize your disposable income. Step number 2, to get control of your mortgage. You want to maximize your home equity. And step 3, to get your money working for you, right? Maximizing your ability to have passive income. So today we're focusing on step 1 and 2 and the foundation of paying your mortgage off faster. So step 1, you're going to get control of your income. You need to maximize your disposable income, the income that is left over after your lifestyle and all the things, your needs, your wants, your giving, everything that you want inside of your life. You want to maximize that amount that's left over. So before you can pay your mortgage off faster, you need to find that extra money to do it. And that starts with mastering your cash flow. Most people try to budget after the money's already gone, but that never works, right? You've tried budgeting before and the studies show that it's only less than 6 months that budgeting usually works. So instead, flip the order. Decide where every dollar goes before it even lands in your account, right? So you'll be planning 30 days, 90 days, a year ahead. And here's a quick insider tip. Did you know that when you automate your pay split the day after payday, you're statistically 40% more likely to stick to your plan? Because the decision's already made before temptation hits. So inside our step 1, which we call the Freedom First Money System, we set up separate bank accounts for bills, groceries, fun money, big purchases, and your extra money that you're going to pay on your mortgage. That structure frees up real surplus cash that you can use for principal repayments without feeling deprived. Now, when you manage your income with intention, you'll start to see money appear that was always there, right? And you were just spending it unconsciously. Step 2, you're going to get control of your mortgage and maximize your home equity. Once you've freed up extra cash, the next step is to use it to attack your principal. Every dollar you pay off, The principal is a dollar that never earns the bank another cent of interest. Sounds good, right? There are 3 powerful ways to make principal-only repayments. Number 1, increase your minimum repayment. Every extra bit above the minimum goes straight to the principal. Number 2 is to make regular lump sum payments. So you drip them in monthly or quarterly up to the bank's annual limit without getting a fee or penalty. And the third one is to make one big lump sum payment each year. It takes a huge bite out of the balance of your mortgage. So here's a myth buster. Banks love when you increase your minimum repayment because they know life happens. Rates rise, a recession hits, a car breaks down, and you'll drop it back down again. That's why we focus on planned principal payments, automated, predictable, and separate from your living expenses. And remember, you don't need a special mortgage structure to do this. Whether your loan is fixed, floating, or revolving credit or offset, these strategies still work when your cash flow system does. Now, step 3, you're going to get your money working for you. This is where it starts to get exciting. As your mortgage balance drops, the interest you're paying shrinks, and that frees up even more cash each month. Use that surplus to invest or build passive income. That's the FastTrack mortgage system, turning the money you use to pay the bank into money that now works for you. All right, as promised, here are the top 3 mistakes Kiwi homeowners make that keep them stuck paying the bank for 30 years or more. Mistake number 1 is following the bank's or your mortgage advisor's advice. So here's what usually happens. Banks actually don't give structured advice, and most traditional mortgage advisors don't either. That's because many of them are ex-bank staff who were never trained to show you how to structure your mortgage in a way that takes profit out of the bank's pockets, right? And puts it back into your pockets. So what happens? You end up with 1 or 2 big loans, and when interest rates rise, your repayments explode and your freedom gets squeezed out. So you need independent strategic structure advice that actually is designed around your financial goals and not the bank's bottom line. Mistake number 2 is thinking that one product will fix everything. So this usually looks like just getting a revolving credit or an offset account and thinking that's going to be the magic wand that makes you pay your mortgage off in 10 years or less. Unfortunately, it doesn't work like that. Those products only work when they're part of a bigger financial freedom system that supports your spending and your saving habits. Because if you use your old spending and saving habits, it doesn't matter what bank products you have, you're likely going to be paying a mortgage for 30, 40, 50 years. Mistake number 3 is relying on increased minimum repayments. That's the classic one. You start strong, then a job change, a health bill, or rising rates force you to drop it back down. And suddenly you're back on the 30-year plan, just like the bank is happy for you to do. And to be honest, most mortgage advisors would be happy for you to do that as well, because that's how the bank pays them. So the fix is to create a system that automates your extra repayments so you can stay consistent no matter what life throws at you. So paying off your mortgage faster isn't about chasing the perfect product. It's about mastering your income and your habits and your plan. Remember, when you control your income, you control your mortgage, and that's where freedom begins.